You're tuned in to Agriculture Today, and we start our Friday show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen, for a grain market update. Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby.
Starting off our conversation, Dan, as we normally do today, with what are futures looking like?
Well, following Wednesday's WASDE report, we've had some movement in the futures. The closes yesterday on Thursday the 13th were with corn being up about 4.25 cents. July corn at 458 D's, 476. Soybeans, July soybeans 11.89 and a half, up 12 cents. So here you had first day post report, you had corn up 4 cents, beans up 12 and a quarter. November up 13, 11.60. Wheat just so. July contract closed at 636 and 3/4, down a half cent. And when you look at the trends of where we're at, so you've got the July corn futures market basically right at 50% RSI, which means it's basically just not large momentum going up or down, but has come off of lows recently about last week and a half. Down, it was down at 440, so up about 458. and really for soybeans, we've taken a more negative approach, more negative trend of late for beans than for corn. We had traded on the July contract down as low as, say, just about 11.75 or so. Closed on Thursday 11.89 and a half. So we've been bouncing around in a range of about 11.75 to 12 for about a couple of weeks. So that's indicative of where that's at. I think the market's anticipating, even with questions, still a sizable soybean crop coming out. And I would say for wheat, we've been in a downtrend for sure, and Guy will talk about this more when we look at wheat and the international factors at play. But we had traded up as high as about 750 over the last couple of weeks, and now for hard red winter wheat futures on July closed yesterday at 636 and 3/4. And I think we have harvest coming on, and generally anticipation of sizable crops. The RSI about running at about 445 or so, just a bit negative. And for soybeans, RSIs again just around 50. So it's interesting time in the markets. And I would say cash wise, from the last time that you and I had talked, Shelby, corn futures continue to strengthen a little bit. And here we get into corn futures, but I mean corn basis does. We've got the strongest basis in Southwest Kansas and Northwest Kansas at the lead markets that we've seen for weeks and weeks. So we do see that occurring. Still a decent basis for sorghum. Not a lot of change in that jumps out at you for the rest of the commodities. Although the strongest basis for soybeans around the state, Topeka and Hutchinson, both 25 under. So, that's indicative of perhaps of some export interest out there. For wheat, gosh, we're coming into harvest. And it is interesting that the strongest basis bids, Salina 11 under, Topeka 16 under, 6 under in Hutchinson, but you go out into the western part of the state, 50 and 66 under. So, it's harvest time, and I think we've kind of switched over now to, yes, we're interested in international issues in the wheat market, but with harvest coming on, we'll have it. Whatever we get, we're anticipating some crowdedness, some glut type stuff in parts of the state, and that, of course, affects basis and bids.
And taking a deeper look at that wheat market, Guy, what are we seeing on the international front?
Well, international markets, just might comment on domestic wheat by class to start off with here. The USDA numbers wheat by class won't come out until next month, but we did see hard red winter wheat production forecast at 726 million bushels. That was slightly above the trade guess of 724. Soft wheat came in at 742, with trade guess below the trade guess of 353, and white wheat came in at 226, well below the average trade guess of 287. on that. So it'll be interesting with the softer finish. I would sort of anticipate improvement in protein premiums out there as we look at that. But I guess the big movers in that wheat market was probably in the world, changes in the world number. USDA pegged this 24-25 season wheat production at 7.4 million metric tons. That was lower, they pegged it at 791 million metric tons, down 7.4 million metric tons from last month. It's up slightly from a year ago, and still a record crop, even though they lowered that down. Just to run through the range of countries that we're looking at, Russia's been key with their weather issues they've been having there. They're coming in at 83 million metric tons, down 5 from last month, and down 8.5 million metric tons, or 9% from last year. They also lowered their export projections by 4 million tons to 48. As we expect those exports to decline coming out of Russia. Right there, their neighbor at the Black Sea, their forecast was at 19.5 million metric tons, down 1.5 from last month, and down 3.5 million metric tons from last year, which was at 23 million metric tons. Exports were down 1 million compared to May at 13. So we should see less wheat coming out of the Black Sea in this coming marketing year. Moving a little farther west into Europe, crop production came in at 132 million metric tons versus 130 last year. So that's up 2 million metric tons, with exports up 1. Basically, we expect to see less feeding in Europe, particularly as that wheat corn spreads wheat's at a bit more premium to corn than it was in the last marketing year. Canadian production unchanged at 34 million metric tons. Australian crop unchanged at 29, but exports lowered slightly to 22. The Argentine crop was increased by 500,000 tons to 17.5. Exports were left unchanged, though. China, which is the second largest wheat producer in the world, their estimate was unchanged at 140 million metric tons, with imports at 11. I suspect those imports may work their way a little higher, but we'll sort of see. But I'm sort of suspicious that maybe that China crop's not as big as what we think, and that'll be reflected, particularly on the quality side, and that'll be reflected in some increase in exports. That leaves us world ending stocks for this coming marketing year coming in at 252 versus 259 from last year. As that's sort of dropping down, that's tightening up our ending stocks to use, down to 31.6 million metric tons versus 32.5 last, or sorry,
yeah,
31.6%
percent stocks to use, right?
Versus 32.5% versus last year. And I didn't run the less China numbers there, Dan. Did you happen to run those?
Yeah, we're down to 18.5, and again, that continues to move lower all the way through. You know, Guy, before you move off that, you know, what's happening over in the Black Sea region, what's happening in Europe, what's happening in China, all point to weakness in the supply demand picture for wheat. Do you have any thoughts on that from what you observed through IGP?
Yeah, I'd sort of agreed with that. Country consumption is near that record consumption as well as production. The thing is, I think we're seeing some demand rationing on that, is particularly our if you put wheat prices, any of the commodity prices in overseas currency, it is still relatively expensive. And there's a number of importing countries that are run their in-country stocks down, running them at a minimum, and they're experiencing that food inflation at a significantly higher rate than what we're seeing here in the U.S. And I've got to believe that's having an impact on demand.
If I can just throw one more question at you on the wheat, you know, the U.S. currency, value of the dollar, transportation costs, all are working against the U.S. in terms of being a competitive player in the world export side. Any thoughts on that?
Yeah, a bit of I won't call it a bright light, a dim light in the foreign exchange this week, or just yesterday. The U.S. Federal Reserve announced that they're only likely to see one increase in interest rate by the end of the year. And I'm a bit probably may call it optimistic or pessimistic, depending on where you're thinking about it. I don't think we'll have an interest rate. I think inflation is still fairly sticky and persistent. Also, being an election year, I don't think they'll do anything before the election at the risk of being accused of being political. And that bodes well for not inflating the U.S. dollar against other currencies quite as quickly on that, and maybe it ought to help bring a bit of demand back into the marketplace.
I just if I could finish up real quickly on the domestic side, the USDA did raise up its estimate of exports by 25 million. 25 million bushels up to 800 million here in the U.S. and tightened up stocks to use down to 39. But what you can see what's happened in the wheat market 2 years ago in 22-23 marketing year, we had basically 30.4% stocks to use, $8.83 wheat. The 23-24 last year, what we just finished up end of May, 37.5% stocks to use. So we increased that. Price dropped to $7, and now 39.4% stocks to use, $6.50. But by the way, the 650 from this report to last was up 50 cents. So there's some action in the wheat market and some underlying risk.
Yeah, well, this whole global transportation issues kind of helping the U.S. out a bit, particularly with the disruption at the Panama Canal. That hasn't fully recovered. We're in the rainy season, and I would expect it to be approaching normal by fall. And we can talk about that after we get back from the break.
Dan, Guy, excuse me, we're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation.